Do you want to dodge making tax digital legally? MTD is going to be really painful for sole traders. But what if I told you you can avoid making tax digital entirely? So first, you need to find out if making tax digital applies to you. Let's be honest about what's heading your way. Right now, you do one tax return a year. You've got 9 months after the tax year end to sort it out. That's coming to an end. From April 2026, making tax digital hits. You'll be doing quarterly submissions 4 times a year, plus a final end of year assessment. That's 5 submissions instead of just one. And there's no free HMRC portal. You'll be forced to buy software because HMRC have dumped the responsibility onto private companies. Miss a deadline, penalty points. Get 4 penalty points, and it's a £200 fine. Then it's £200 for every missed submission after that. Your spreadsheet's useless unless you buy bridging software, your bespoke system that works perfectly. Tough luck. If it's not HMRC approved, you can't use it. This is going to cost you money, cause stress, and frankly, it's going to destroy some businesses. When MTD for VAT came in a few years ago, some business owners and accountants just shut up shop rather than have to deal with it. So before you panic, let's find out if this actually applies to you, because maybe you can dodge this entirely. You're in the first wave if your turnover is over £50,000 in the 2024 to 25 tax year. Not profit, that's turnover. That's the self-assessment you need to file by the 31st of January 2026. For example, if you're a landlord with rental income over £50,000, you're in the MTD net. And if you've got both business income and rental income that combined hits £50,000, you're definitely in the MTD net. And it's going to get worse. The thresholds drop to £30,000 from April 2027, then just £20,000 from April 2028. Eventually, they want everyone in this digital prison. Whether you're going to be doing this in April 2026 is based on your 24 to 25 figures. So you can find out right now if you're going to be dragged into HMRC's experiment. If you are caught, here's what your life looks like. You need to submit income and expenditure figures quarterly, roughly a month after quarter ends. April to June, submit by end of July. July to September, submit by the end of October. Every single quarter without fail. You still need to do a final year-end submission too, so that's 5 returns instead of just one. All through software you have to pay for, all with penalty points hanging over your head if you mess up. And if your accounting year doesn't run April to April, they're forcing you to change it. This could mean overlapping profits, getting taxed on the same income twice, while you wait years to get your money back from HMRC. Here's what you probably don't know. There's a legitimate way out of this mess, and it's a strategy we've used on loads of our clients already. So the limited companies don't fall under the Making Tax Digital for income tax regime. They still do accounts and corporation tax, but once a year. No endless quarterly returns and no forced software purchases. We've had clients specifically incorporate to avoid MTD, and here's the irony. They often end up better financially too. You get dividend allowances, better cash flow control, and other legitimate tax planning opportunities. It's not just about avoiding MTD, it's about running a more tax efficient business. So before we go any further with incorporation strategies, you need to know if MTD applies to you. Because there's no point worrying about quality submissions if you're not even caught in this mess. We've created a simple questionnaire that tells you exactly whether you'll be dragged into MTD in April 2026 based on your 24 to 25 income figures. It takes 2 minutes and gives you a clear yes or no answer. If the answer is no, brilliant. You can ignore the whole bloody thing for now. If it's a yes, well, that's when incorporation could be your legal way out. Think about it logically. HMRC are forcing you into quarterly reporting because they want more control. But if you incorporate, you're already filing annual accounts with Companies House, you're already in the system, and you're already compliant. The corporation tax system is designed for businesses. It's more mature, more stable, and frankly, HMRC are just better at handling it because they've been doing it for decades. Here's what's really happening behind the scenes. Most accountants are terrified of MTD. It's just as daunting for them as it is for clients. They're not telling clients about incorporation because, frankly, many just don't understand the tax advantages properly. We've spoken to accountants who are considering retiring early rather than deal with MTD. They don't want the hassle, the complaints, or the liability when things go wrong. And trust me, things will go wrong. It's new, it's untested, and knowing HMRC's track record of IT rollouts, it's going to be a disaster in the first year. Remember the tax credits fiasco? I have 35. This will be worse because it affects millions of small business owners. We've incorporated more businesses in the last 6 months than in the previous 2 years combined. We're helping business owners wake up to what's coming and take action now. If you want to avoid being trapped in the MTD net, now is the time to think about this. So, what does becoming limited look like? If you're making £50,000 profit as a sole trader, you'll pay roughly $9,800 in income tax and national insurance. As a limited company, your tax bill is about $9,700. On the face of it, you save a little bit of tax. But what most people don't realize, there are so many different legal tax strategies available to limited companies that the amount you actually pay will be much lower. You've got pension contributions, company parties, trivial expenses, home office costs, all deductible against corporation tax before you even start taking money out of the business. As a sole trader, you're paying tax first and trying to claim deductions later. As a limited company, you reduce a taxable profit before calculating the tax. But even without those strategies, you can control your tax timings, take dividends when it suits your cash flow, and structure your income properly. Plus, you escape the stress and admin of MTD. Now, incorporation isn't going to be for everyone, but the flexibility, control, tax planning opportunities, and avoiding MTD make it a smart choice for more people in this position. So you've got three options. Option one, stick your head in the sand and hope it goes away. Spoiler alert, it's not going to happen. Option two, accept making tax digital, buy the software, do the quarterly returns, stress about penalty points, and potentially pay more tax than you need to. And then you've got option three, incorporate before you get dragged into MTD. Save tax, keep doing your annual returns, and just sleep better at night. We're helping a lot of clients make this switch, not just to avoid MTD, but because it's simply better business, better tax position, better structure, and a better protection. The deadline to get out of this first wave is fast approaching. If your 24-25 turnover puts you over £50,000, you need to act now. We're not letting HMRC destroy small businesses without a fight. This quarterly reporting system is bureaucratic nonsense. That's going to cost you money and it's going to stress you for no good reason. We've created a simple questionnaire that tells you if MTD applies to you in April 2026. It takes 2 minutes, gives you a clear yes or no answer. So find out if it's best for you to actually just opt out of MTD.